Meet Steady Eddie and Risky Ricky. Eddie invests in ETFs. Slow, boring, predictable. Ricky picks stocks. Fast, exciting, volatile. Both want the same thing, to build wealth. But here's the twist. By 2025, one of them will be sipping margaritas on a beach. The other? Stuck in a cubicle wondering where it all went wrong. Today, we're settling the age-old debate. ETFs versus individual stocks. Which one gets you rich faster? Which one could leave you broke? And why does Wall Street hate when you figure this out? Let's break it down. No jargon, no spin, just the truth. Team ETFs or team stocks? Share your pick in the comments. Let's start with the basics. ETFs are like this SUV, safe, reliable, built for the long haul. You're not winning any races, but you'll survive every pothole, detour, and storm. Individual stocks? They're the sports car, blazing fast, heart-pounding thrills, until you hit a puddle and spin out. But speed isn't just about horsepower. It's about direction. A sports car going 200 mph off a cliff isn't winning. So, how do you pick the right vehicle for your journey? Let's talk about risk. When you buy individual stocks, you're betting on a single company's brainpower, leadership, and luck. One scandal, one bad product, one tweet, and poof, your savings vanish. ETFs? They're like a family photo album. Even if Aunt Karen's perm was a disaster, the whole album isn't ruined. You own hundreds of stocks, so a few duds won't sink you. But here's the catch. Safety comes at a cost. ETFs spread your risk, but they also spread your rewards. If you'd bought Amazon in 1997, you'd be a millionaire. An ETF holding Amazon? It'd be a fraction of your portfolio. So, is safety worth the sacrifice? Now, let's talk effort. ETFs are that textbook, full of answers, but nobody wants to read it. You set it, forget it, and let the market do the work. Stocks? They're the page-turner. You're glued to earnings reports, CEO interviews, and Reddit threads. The problem? Most investors aren't Warren Buffett. They're chasing hot tips, panic-selling dips, and missing out on sleep. Meanwhile, ETF investors are hiking, playing with their kids, and building wealth. But what if you could beat the market? What if you've got a knack for picking winners? Let's dig deeper. Science time. Studies show that over 10+ years, less than 10% of stock pickers beat the market. Why? Two words: emotions and fees. Every time you trade stocks, you're fighting commissions, bid-ask spreads, and your own greed. ETFs? Their fees are microscopic, and they automate the one thing humans suck at: doing nothing. But let's be real. Nobody wants to be average. We all think we're the exception. So, when does stock picking make sense? Imagine sitting at this table. To win, you need three things: time to study the game, skill to outplay opponents, and luck to avoid bad beats. Stock picking is the same. If you've got years to research companies, patience to hold through crashes, and discipline to ignore hype, maybe you'll beat the ETFs. But if you're juggling a job, kids, and Netflix binges, ETFs are your all-in bet. And remember, even pros lose. Bill Ackman, Cathie Wood, they've all crashed and burned. The market humbles everyone, except the index. Here's the dirty secret Wall Street hates. Compounding works better with ETFs. Why? Because they never die. Individual stocks can go bankrupt, get acquired, or fade into irrelevance. ETFs automatically replace losers with winners, keeping your money growing. Think of it like farming. ETFs plant 1,000 seeds. Some wither, some thrive. Stocks? You're betting on one seed. It might become a redwood, or it might get eaten by squirrels. So, which path wins? It depends on your goals. If you want to retire comfortably without stress, ETFs are your golden ticket. If you're chasing financial independence by 40 and can stomach 80-hour weeks researching companies, stocks might get you there faster. But here's my take. Start with ETFs. Build a foundation. Then, use 5 to 10% of your portfolio to play with stocks. That way, you're safe and satisfied your inner gambler. Win-win. So, who really builds wealth faster? In the short term, stocks can skyrocket. But over decades, ETFs almost always win. They're boring, they're humble, and they're ruthlessly efficient. But I want to hear from you. Are you riding the ETF tortoise or sprinting with stocks? Let's debate in the comments. If this video helped you pick a lane, hit that like button. It tells YouTube to show this to more investors. And subscribe if you haven't already. Next week, we're breaking down how to mix ETFs and stocks for max growth, a strategy that's changing the game in 2025. Thanks for watching. Remember, slow and steady doesn't just win the race, it owns the track. See you next time.